I'm the publisher of The Bond Buyer. Thank you all for joining us. Thanks to RTS for inviting us into the CME for hosting this. We are very happy to be here. I'm here to talk about a new product we have launched commercially just in the last couple of months called The Bond Buyer's Rapid Data, and how it applies to a specific algorithmic trading strategy, specifically trying to react to news and things like that. To give you a sense of who we are, The Bond Buyer is a 117-year-old daily newspaper covering municipal finance. I will say up front I am not a trading expert, but if you want to talk about the intricacies of tax-exempt bond law, I can keep you busy for a while. In addition to our municipal finance news covering what governments are doing all over the country, we also cover all the macroeconomic news, unemployment, inflation, that kind of data that affects interest rates around the country. We've been doing that for about 40 years. We have reporters in all the lockups at the Bureau of Labor Statistics, the Commerce Department, and Treasury Department, where that data comes out of. We also have a long history here in Chicago. Our Bond Buyer 40 Index was for years the reference for the late lamented CBOT Muni Bond Futures contract, which was the underlying for my favorite spread of all time, the MOB spread, the Munis over bond. To give you a sense of what the Bond Buyer's Rapid Data does, this is a brand new service we've just built in the last 6 months. It's a high-speed, extremely low latency distribution service, bringing that economic news in machine-readable format directly to Chicago. What we've tried to focus on here, there are a lot of players in this space. There are a lot of news services that do a ton of more stuff than we do. What we've tried to focus on is the highest value data to the highest value clients who are mostly here in Chicago. Really briefly, what makes news an event, and we can sort of break down what news is into two categories. There's scheduled news and unscheduled news. The unscheduled news is stuff like intra-meeting Fed Reserve rate changes or new oil strikes in Nigeria. That's not what we're talking about here. We're talking about the scheduled news, and specifically the macroeconomic data, which comes out in a very regular forecast. It's the same reports every month. Everybody knows exactly what they're looking for as far as the content. But there's often surprises in terms of what the data may show. This is very highly looked at content by research analysts and those kinds of things. So there's usually a very firm market consensus on what they expect numbers to show. Any kind of diversion from that is almost guaranteed to move markets. An example of a surprise, you don't have to look far. Just in the last couple of weeks, on July 31st in the morning, the gross domestic product numbers were released at the Commerce Department. At the exact same time, the Labor Department released its weekly initial jobless claims. As you can see, if you take a look at the numbers altogether, the survey and the expectation on GDP was for a 2.3% growth in the second quarter, driven mostly by people spending their federal income tax rebate checks. That was much smaller than it turned out to be. It was only 1.9%. At the exact same time, the initial jobless claims number came out, it was 50,000 claims higher than was expected by the market. All in, that showed a picture of an economy that was a lot weaker than people had expected it to be. And if you take a look, the markets certainly responded. This is just one contract that responded to it. It was the S&P 500 E-mini futures contract. But you can take a look across the markets. Everybody was responding to this. One thing that's important, though, especially for algorithmic traders, it paid to be the first into the market. The markets responded almost instantly. In the first 200 milliseconds, there were, I believe, about 1,000 contracts traded hands, and the contract fell 2 points in just that first 200 milliseconds. It took another 2 seconds for the next 2-point move to happen. And as you can see, it kept going for a little while there. But getting in first was an opportunity to definitely profit from that news. How the whole system works is you set your parameters ahead of time. You're going to pick what components and what indicators you're looking for. So one example would be you can pick the CPI, and you're going to say if CPI is in excess of 0.4% for the month, you want to do. You can then put in your order and pick what contract you want to move, what amount, and what price you want to execute at. The early adopters have definitely been focused on the futures markets here in Chicago, but there is relevance to other markets. And I think one of the things that, to echo Christoph's point earlier, one of the things we're trying to do with this product is to provide the raw data that allows you to bring your own value to the table. We want to allow you to be creative in finding the markets and finding the strategies that work. We're just providing the kind of the raw fuel for those trades. The reason we are here today is because this system is being integrated with RTD Tango. It's a partnership we're real excited about because, again, we think that it allows people to get in without a heavy-duty investment on the technology side and the development side to code directly to our API. This is a very user-friendly format that allows you to execute these kinds of strategies. You do have to be committed to the trade. The services, and our service is no exception, are expensive. You have to subscribe to them up front. But this is an area that you can get in without having to do a massive other investment on staffing and time and that kind of thing. Another thing that is important to note is that the hard part isn't necessarily the strategy. The market knows, it doesn't know whether it's going to be surprised, but it knows if it's surprised, how it's likely to react. But the point is the exchange connectivity and being able to execute on those strategies quickly. Again, that's something that Tango helps you do very well. Just to give you another sense of one of the things that makes our service unique in this field is that there are a lot of indicators that have a lot of different components that combined will tell a story that might be different from the story told by any one piece of the indicator in isolation. If you take a look at the unemployment report that came out just last Friday, the headline number is the payrolls. The survey was an expectation that payrolls were going to be down 72,000 across the country. The actual number was they were only down 51,000. It's not a huge surprise, but it looks a little bit stronger than you would have expected. However, the second component, the unemployment rate, was actually up more than expected and up over the previous month even higher than the expectation had been. So all in, ultimately the market concluded that the report was weaker for the economy. But you wouldn't necessarily have known that from solely that first number. One of the things that algorithmic systems can do is they can analyze the full picture much faster than a human can react to multiple components. And the other thing is that rapid data is actually particularly customized to deliver the entire package at once, so that your strategies can have multiple components and multiple variables that you act upon.